Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linn & Associates with your weekend edition of your metals market update. And this is for Thursday. And yes, it's not Friday, but it's a weekend edition. It's the 29th of March, 2018. Remember, and I want to wish you all happy Easter and all our Jewish friends. There's a holiday going on for you right now. But to everybody, we're not open on Thursday night now. All the U.S. futures markets are closed for Good Friday. They will reopen on Sunday night. Yes, Japan and China are open, and it is a banking holiday. So it's so confusing that some of the markets are closed. In fact, most of the futures markets and the cash markets are closed. Just accept that that's how it is. All right. So let's talk about this week because it's still a week where we're not exactly certain what's going on with the war of trade. And it is. It's trade war, trade talk. Obviously, it's the art of negotiation between President Trump and world leaders. You've seen a lot of exclusions given, but on the first week of April, by April 6th, the president has to give a list of his demands and what he wants done to China. That's because he signed that proclamation to do so. As he does so, China rightly is going to say, no, that's too much, or yes, that's fine. Which way do you think it'll go? Which way hits the press every day? We've already saw today that with Russia, the Cold War curtain is coming back down. Today, they're kicking out 60 U.S. diplomats. Then they're going to take aim at a number of Europeans and other countries that kicked out their diplomats. It appears to be a tit for tat. Our consulate in St. Petersburg is closed down. We closed theirs down in Seattle. So you're going to get all this going on. I realize at the end of the last 4 days, it's gotten quieter on these trade war talks. Remember the lull before the storm. The harder stuff's right in front of you. Same thing going on with Canada and Mexico. Yes, the NAFTA talks we hear are doing better. Are they? We'll know when we see actual progress. When you look at a monthly bar chart of gold, you've had consolidation since 2016. The market is trying to break through the 100-week average on the top and the upper Bollinger Band. What's the Bollinger Band? The Bollinger Band, the black lines, represent an algorithm to keep the market trading within them 95% of the time. Eventually, they have to break out when a trend comes unless the market's just going to sit complacent within them forever. That will not be the case. Can it be long periods of time? I'm already defining it as almost since 2015, so 3 years is a long period of time. When it breaks out, be it to the upside or downside, it's going to be a son of a gun. Most people think that, well, it'll be to the upside for the reasons of inflation, trade wars, fiat currency as we keep spending more in America than we have. For the first time, I saw that you can now buy oil. China's going to pay for oil with yuan, not U.S. dollars. A little bit of a difference that's going on in the world. When we look at a weekly area chart, and this was the monthly area chart of gold, you're pulling back to that 18-week moving average of closes, so the bias is up, and 3 failures back into the 1350s have broken the market each time back down towards the 1315 area. You see that on this chart. Close under the 1300 level, you probably attract a group of sellers that'll say maybe the market gets back down to this level. Right through here where you see a gap in the chart. Take it through the 1360 level, I think traders will say you're breaking out to the upside of the market. I've written gold reports and my numbers haven't changed very dramatically since a couple of months ago. All you've done is gone sideways in here. I don't make the market, I write about them. And you haven't broken out yet one way or the other. If you look at the swing lines, though, they're telling a story that you've got a pattern of higher lows and higher highs. That is the definition of an uptrend. If you break through 1306.60, you lose that pattern. You would have a pattern of a higher high and a lower low. You would not have a trend, but you would break the bullish beginning of a pattern. In addition, I look at moving averages. Now, the 18-week moving average is in red, the 100-week moving average is right here in green, and the 200-week way down here. If the market breaks through 1306.60, it's possible you're going to make a run for that lower average. If the market holds here in the 1350 area, where might it go on the upside? Because I don't have any key averages up there. The market's above those. Then you're into the 1376.30 level. Why? It's that important. Well, Bollinger Bands, traditionally, this is what they're built to do, will keep a market trading within them 95% of the time. More times than not, you go up to the band, you break back. Go down to the band, you go the other way. As the market builds itself, it coils, especially if it's going sideways and you get momentum from that. On the slow stochastics, we have momentum turning down, price down, and the market trying to hold the key average. So two of the three things are working against the gold right now. When I come to the weekly bar chart of the gold ETF, momentum is pointing down. The market has done a good job of holding the 18-week moving average, and it has the pattern of higher lows, higher highs. So like the gold futures, you don't want to see the last break low taken out of 123.96. If the market can build upside momentum, maybe it's 130.30. Like the gold futures, because you have a higher high, even if you break through the low, you're not going to get a trend. You can get a thrust to the downside, but you won't have the pattern of higher lows, higher highs. GDX, which is the gold miners, has a pattern now of higher lows, higher highs. It rallied for the first time in weeks back to the 18-week average of closes, but sort of stalled out on us, couldn't do anything, and by the end of the week, down 14 cents. Momentum is flat in this market. It needs to close over the 18-week average to do anything positive. If it takes out 21.16, like the other markets, you'd have a higher high and a lower low. In the silver market, you still have a bear pattern. You still got the pattern of lower highs, lower lows. What do you see that should be obvious to you? You keep failing against the 18-week average on the weekly chart, and momentum is still pointing down, and the bias is down. For this market to turn bullish, it cannot afford to take out last week's low of 16.5. Why? Because if it doesn't take that out and just turns up and you took out this high, you could make an argument you'd have higher lows and then a higher high. You're not there yet. These are the what-if scenarios. First, I think the pros keep selling it at 16.57, unfortunately. In the copper market that we call Dr. Copper, because world economies use so much copper, especially productive ones, think of China, all the exports they do, the U.S. with all the building things we do, this isn't a good-looking chart. This has got lower highs, lower lows. Now, if you get my research, I wrote this week that I thought support would come in against the lower Bollinger Bands, which it did, and the market did turn up from it. You got down, if you look at it, 294.60. The lower Bollinger Band on the weekly chart was 294.70, and you bounced very smartly off of that, closing up from that level almost 8 cents. Resistance back at 313. We have to see what the market can do, but the bears still control the look of the chart. Same thing on the weekly chart in platinum with lower highs, lower lows, momentum pointing down, and the palladium. The good news is both the palladium chart and the copper have gotten down to points where they really don't have to fall any further. It's all going to matter on trade. If trade isn't good, if we hear that we're getting back into that trade war talk, those are the metals that'll fall on you. Be careful. In the dollar index, on the longer-term charts, the weekly, we've got lower highs, lower lows. That's bearish. You're under the 18-week. That's bearish. But momentum is trying to bounce up. That's why the daily chart has turned itself positive. You know, we talk about a lot of this with our friends and people that write for Modern Trader magazine. And yes, I know some of the writers. I know the editors of this and so on. It's pretty cool because what this magazine covers are individual stocks, metal stocks, anything you want from there, the derivatives, cycles, FX, the grain markets, stock markets. They go through each and every one of these, and then they have great stories and articles about it. You'll see techniques and tactics through here, chart patterns in there. Doesn't matter what the market is, you get to learn about that, and that's the key. And then, of course, after the bell, cryptocurrency wallets, things of that nature. Comes to you as an email. This gives you a look of what some of the stories in the current edition are. This is the April magazine. We're going to get the May any day now, and we'll put that up for you too. Then to go along with the daily, you get Market Focus. $79 a year value from us. It's free. You can go buy it on the internet. That's up to you. How do you get it? You can call our staff. You can go to our website. You'll see our free offerings and click what you'd want from there. It's not just this that we offer. It's quite a few things. You can come up here, and under us it says, click here for Ira's free offer on some websites. I'm Ira Epstein. You have a great holidays. I'll see you all Monday.